Do it. Okay, 5, 4, 3, 2. All right, 5, 4, 3, 2.
Wait, what's this called? Big announcement coming soon?
Yeah. Welcome to the Big Announcement Coming Soon podcast. I'm one of your three hosts today, Michael Bull, joined by Jeff Renson and David Collette. Nick is away today. He's like working on a presentation or something for 21st Century Learning, and apparently he can only do one thing at a time.
Yeah, he's a busy man.
All right. Yeah. So we're going to talk today about cryptos being debanked. We're also going to talk about some 4-year cycle, which is apparently restarting again. And that's going to be David's favorite guy, Bob. And then the Arbitrum, which is a foundation. I'm not really familiar with it, so we'll have to talk all about that. But we'll start first with cryptos being debanked. So this is a headline or an article from Barron's talking about how we have Signature Bank and other banks kind of just either going under or shedding its crypto assets. So isn't this the whole thing we wanted to happen with crypto anyways? Like it's just going to be its own independent money that won't need banks.
No.
Are you guys thrilled?
No. I mean, yes, you want to have people have the option to be debanked, to use something that's not a bank, but this is more kind of like saying, okay, you can't join the ride. We're closing the park. So how do you buy crypto initially unless you have a bank account, unless you have money to buy
that's your
it? So it's essentially
point,
like,
right?
Yeah, slightly illegalizing the whole enterprise or making it like, no, not for you. Yeah, it's interesting. I was reflecting the other day on this in terms of like China was this thing happened in China, like, in the middle of the bull run last year.
You mean when
it took a while.
The mining.
Yeah, they've kicked out mining, kicked out all crypto, closed the exchanges, no anything. Of course, there was some who, of course, could still do it, right? Like will happen here, but the effect of that was more that it just shifted somewhere else and kept going, which is positive, hopefully, for what's happening now, because I definitely think it is a pushing down. It's deliberate. It's Nick Carter talks about Operation Choke Point 2.0, and yeah, it's very deliberate. Like apparently, Signature might have
that was
like
the way Tether was getting banking
move.
Like that was way over the line for just eliminating Signature Bank, is what it sounds like.
And that's what the speculation was, that maybe they were banking Tether somehow without them supposed to being, and then that was like, okay, you're just banking.
Now you're making it sound conspiratorial, as if some rogue group is out there trying to end crypto.
So this is Barney Frank, former senator from Massachusetts, who is on the board of Signature Bank. Congressman, sorry. He came out and said, there's nothing wrong with our bank. We were not in the same in the same basket as Silicon Valley. We did not have trouble on Friday, nor were they contacted on Friday when Silicon Valley was. But Sunday in the afternoon, they were just told that they were being shut down. So he felt like they weren't in the same position to need to be shut down, and this was an arbitrary choice to go after them for running what's called Signet, which would send, if you're trading USDC for dollars, they would send money between banks, if I'm not mistaken, to make that USDC available on the US dollars available on the weekends, so you could cash out rather than waiting for 2 or 3 days for a transfer. So they were facilitating even all the legal, if we stay away from Tether, which it seems fine. I mean, I'm not ready to have that discussion right now, but Signet was facilitating legal U.S. bank money movements that happened to facilitate crypto. So Barney Frank says they shut it down.
So or they took advantage of it's kind of, you have to look at the sum of all the evidence, right? So the beginning of the week, you see Silvergate. This time I actually do mean Silvergate when I always say it wrong. Silvergate got bankrupted.
Do you know how to say Signature Gate?
Yeah. So Silvergate was banked and went under. Then SVB was going under, and they rescued, sold, got rid of it, but all the crypto parts have been kind of blocked out of the sale. And then they did the same with Signature. And so the only banks that have gone down in the last week have been like ones that touched crypto, and all the other ones, like First Republic, like they poured hundreds of billions in to save First Republic. So which banks are being targeting like, crypto movement type things, or who's doing it is kind of like each individual piece of evidence is subject to kind of like a conspiratorial test. But it happening at all is definitely true. Like you can see it happening because enough people in high positions, not just guys on Twitter.
You keep saying, you can see it happening, but who's doing the happening? Who's making it happen?
Oh, like
the
when
FDIC,
the Fed bought up. Sorry, when they took up Silvergate and then redistributed, they took Signature Bank. They're selling off the pieces of it. Part of the piece is the technology for Signet. They're specifically saying you may not buy this crypto piece. It is being shut down. You can buy their mortgage lending wing, stuff like that.
So are you saying it's a conspiracy, or maybe that's not the right word if the federal government's doing it?
It's a series of choices to target crypto, which if they're all made together is a conspiracy. If they're made individually, are just anti-crypto.
Yeah,
it's more specific than that. Like it's kind of like weed being debanked. We all know it's happening. It's not a conspiracy. And so this is the same thing. Like, so after Signature went down, the people like Nick Carter and people who run funds who actually like work with crypto companies who need to put their money in banks, DeFi and stuff like that, have been reporting back that the banks are now saying we're not going to bank you. We can't set up a bank account with you anymore, specifically because what you're doing is crypto. And if you do that, there's all these rules for how much we can allow of deposits of crypto in the bank, as well as we'll have extra oversight because of that. And we can't afford that extra oversight. We don't want to have it. So it's not like illegal things happening. It's more just like you just throw the book at the bank if they start to do risky things like crypto. And so you kind of just push it out of the thing. So it's not like it's not possible, but it is definitely a lot harder to bank now. Well, and that's why a lot of these banks be shut down.
That seems fair enough. I'm not really thrilled that banks are taking on risky stuff myself anyways, but it's
not risky stuff though. Like crypto is one-to-one backed, right?
Oh, I see. So, well, in theory,
yeah, they're not investing in Terra Luna. They're holding dollars for other people.
Here's the beauty of this law, and this is where us who are perhaps left of center might enjoy, is that the law that they're using was used to go after payday lenders, right? Payday lenders were the first people they tried out debank, and payday lenders for sure. We're all they're all those guys.
Yeah.
So they use this law to basically debank payday lenders and stop them doing business. Now they're using the same thing, but on crypto in their arbitrary the crypto is bad way, and that's the problem. It's kind of like we don't think crypto is bad, but they think crypto is bad because they think crypto is bad. They can crush it. Whereas payday lending it was a lot more obvious, but that's the way the ethics works, right? If you do it once,
so that makes sense. In a lot of ways, you could say crypto is bad you have people out there trying to like change their lives.
There's arguments. Sure, exactly.
Crypto and to make that more difficult. Now, should the government be a nanny state or not versus the check cashing guys who were exploiting people?
Yeah, well, I mean, Robinhood is a classic example. I just saw a video of some guy on Robinhood
you posted that.
Yeah, exactly. He lost all his money on Robinhood, and instead of kind of paying his debts, he just tried to delete your account.
This is what happens. Okay, first a little background. A couple years back, there was a bug on Robinhood that allowed you to get infinite leverage. I ain't going to explain exactly how it worked, but I used it to get $50,000 of margin off of a $1,000 deposit. And I'm guessing you know what happened next. I bought a bunch of 0-day expiry options, and I lost it all, basically. So obviously the next logical step is to just delete the app, right? I did that. I thought I was good for like a month, right? Blocked Robinhood on my email, everything. Like 2 months go by and a dude shows up at my door with like papers. He said I would like some collection company or some shit, and it was like $75,000. Basically, this guy said if I didn't pay up, he was going to take me to court. I was like, go for it. I got nothing. I don't even got wages to garnish. In the end, I think Robinhood just like took the loss or whatever because I haven't paid him a dime.
What he doesn't realize, or what everyone doesn't realize, is his credit score is in the toilet, and he just has no idea, right? Like, should that guy have been allowed to do that huge mistake to his life on an app? Well, I mean, that's currently legal, and so it's kind of like, what's the difference?
Yeah, how much of the nanny state should a nanny state be?
Well, and part of the problem with the nanny state doing this is they debanked payday loans. They didn't shut it down, and they didn't provide a solution for people who get paid, can't afford banks charge you to keep money in the bank unless you have enough money. So where do you get your check cash if you're only living month check to check, week to week?
Right.
That's a cost you can't afford. So there was no alternative. The whole co-op community credit union bank helps.
Yeah, the Biden administration
people,
is going after that. If I remember, I think I heard a couple weeks ago to lower those or eliminate those fees. But yeah, that's a good point. It created that.
That's a good thing for sure.
It created that ability for check cashing guys to exploit.
Yeah.
So, but what if crypto's being debanked? I guess the bigger question is why is it not dropping to 5,000? It's
being rebanked. It's like
winning the fight.
We'll start with Switzerland, David. It's being rebanked this week, right?
Yeah, hell yeah, Switzerland.
So it's finding its way.
So there's an interesting, Switzerland just Post Finance will allow you to buy and hold crypto through their bank. Post Finance is a Swiss-run bank. It's I don't know what it would be like in America, but it's kind of like where you bank if you don't have a bank. You at the post office. You go to the post office, give them the money, they put it in the bank.
You used to be able to do something like that in the US, yeah.
Yeah, the most common used bank for your most average person saving money without bells and whistles and UBS or whatever it is. So yeah, that's interesting. I mean, if you think about it from a political standpoint, it totally makes sense for America or China back in the day to be against crypto because it's attacking the most powerful thing they have, which is the reserve currency, and also playing games with it and also hurting people globally using stable-backed US dollars as like there's a lot of reasons why obviously they wouldn't like it, but what happens if they do this, as I would say, like we saw in China, it's not going to stop. It's going to move to Europe, probably back to China. Hong Kong is opening up again. So, right, it's like it flows back and forth. Yeah. I mean, China has a huge incentive to continue to allow crypto. If America hates it, China, bring it on.
Yeah.
Well, and like we keep on saying, Fidelity, NASDAQ, it's coming back to being easily available and traded in the US just in the hands of new people. The right people are going to be taking the fees when we start trading the 2024 bull market and the rest of the 23 one.
Okay.
Yeah, they saw the premium on BTC and said, hey, that's great. People are willing to pay 60% above the cost of Bitcoin in a bull run. Mine.
All right, we should move on now. We're going to talk about the cycle or we're going to talk about Arbitrum?
Let's talk Arbitrum really quick.
Okay, so tell us what Arbitrum is and why we should be excited that some feedback or some change didn't pass.
Not excited. It's just something that's interesting. So Arbitrum's an L2 chain for Ethereum.
Okay.
After it's been running for, I don't know, a year or two. And like Optimism, it's a different type of tech to scale Ethereum, along with ZK Sync tech that's all running right now. So Optimism did their token drop.
And they're an L2 as well.
A year ago. They're a different L2 that has a slightly different tech. And that dropped off, but people weren't using Optimism too much. Arbitrum was being used a lot. There was a lot of value over there, a lot of DeFi happening, a lot of decentralized trading over there. And they dropped their token now a week ago or so, maybe 2 weeks. What they then did is put up a vote to transfer tokens to the foundation and basically
with tokens that were in the treasury.
Tokens in the treasury, that because they had they create all these tokens and they're distributing. They airdrop some get held for marketing, some were sent to Wintermute for market making. And as they put the vote up and they voted themselves yes, they just started distributing the money as if the entire thing was a yes vote, and the votes quickly caught up to be a no. So what they were doing was voting to send themselves 750 or 7.5% of all Arbitrum. And by the time that the no votes caught up, they had already sold 10 million Arbitrum. So they front ran the vote. They sent the money over without DAO approval. They basically broke all the rules of decentralization.
Of DAO decentralization.
Yeah.
Okay.
Now they've come back and said, you've all voted no. So breaking it down piece by piece, they said, well, we've already taken the 10 million we need for operating costs, which sure, but they stole it. If they had re-voted and people said, yes, you do need that for our operating cost, it's fine. If they just transfer it because of their own rules of having votes, they violated them. They're going to make each proposal smaller. They've said that they have to do that, which is a community request. So each proposal will focus on one thing at a time. They are re-voting for the 750 million. Now, I don't know if that includes that 10 million that's already been sold or not. I'm 90% sure it does not. But they're going to have the community re-vote to distribute that 7.5% and then have a 4-year vesting cycle so they can't sell or vote with those tokens at the foundation. More transparency. And now they're funding an ecosystem development fund. They are not funding the DAO. And I wonder how much the case last week from BXY, was it DXDY or Bixie?
Bixie, yeah.
So that DAO where the DAO
Bixie sounds cooler.
token owners who were voting were held responsible. And I wonder if this is transferring money to a dev fund that's not the DAO because the DAO is about to get in trouble. Are all DAOs about to get in trouble? So this is a big step back, and then kind of didn't step back, but they still kept 10 million of it. This isn't my point of started with optimism is this isn't the first airdrop. This isn't the first L2. They've been able to look at what other people have done, right? Cosmos had tons of airdrops before. This isn't new in crypto. So ignorance or malice, because this chain's been around a long time. We've been talking about this airdrop for a long time. They had time to work this out. It wasn't a quick proposal mistake. Oh, whoops, we just needed that 7.5. Like, they had to have had a meeting to talk about how does the DAO work? How do we get this 7.5 transferred if we believe that's what the foundation should have? And it's just interesting to see so many missteps, especially from an ecosystem that has had so much praise and at least on the tech side done so many things well over the last year.
Why should we care?
Yeah.
Like, why is this important? Like, who cares?
Well,
like, why would anybody want to invest in this anyways?
I'll take the counter because there's a couple of missing facts from all of that.
Yeah.
So firstly, it's not 7.5 million; it's 750 million. So almost $1 billion.
So 7.5% of the total.
Right, exactly.
Yeah.
Okay.
So essentially, like, the way that they would have set this up is that they were like, okay, so we have this many tokens, and we're going to give away this many. We're going to give these things to these different portions, and this is what we're going to do to run our project. And then they did that. They gave away the tokens, and then my perception of it is that when they put this vote out, they should just never have done that. Essentially, like, the DAO they have doesn't exist yet because it hasn't been created. Mm-hmm. As such, the vote was perfunctory. It was just like, hey, we're doing this. You can vote on it or not. Why the hell you would allow that to happen when you know the outcome will probably be don't give away money? Is stupid. And so what they had to say is this wasn't this is just a ratification of the vote occurring. It wasn't a actual this counts vote. But thank you for your feedback. And
that's where, like, they misstepped because they had a vote.
Yeah, totally, for sure. Yeah, exactly. So definitely they screwed up, and they should have been much more clear but I would argue they were already going to do that with the money anyway. That's kind of just part of running your business. And so, like, malice is a bit of a very strong word to use. The second thing, I think, ignorance or malice,
but you're convincing me they fall into the ignorance part of just terrible comms and shouldn't have had a vote. But maybe that's at 2016, the same time, man. The people have done this before.
At the same time, I mean, we're all very kind of kingly about our voting, right? Like two weeks ago, Arbitrum just gave us free money, and now we're like, hey, you can't do what you want with your protocol. I'm a voter. Like, I got this stuff for free. And there was like, hey, so essentially, Mike, what happened is that you did stuff on Arbitrum, and based on your actions on Arbitrum trading stuff, you got Arbitrum tokens. And then you either held them or you didn't held them, you sold them or not. But they was just freely given to you, right? So like, you either got some of the top people got 10,000 of Arbitrum tokens, which is about $15,000 at its peak, was just given to them. Mm-hmm. So then, this came out and people were like, hey, that sucks. And so then those tokens that were freely given to them went from $15,000 to $10,000. And then they're all pissed off. And they're like, wait a minute, my 15,000 of free dollars is now 10,000 of free dollars. I'm pissed at you, Arbitrum. Even though Arbitrum has, like, developed a token that has really held great value compared to Optimism, which is boom, like you're saying. But Optimism's come back for sure. So all in all, like, Arbitrum is a great system. It's a great chain. They didn't do anything wrong. On purpose. They messed up their DAO functionality voting thing, but they did so trying to spend their money to improve that money is going to partners of Arbitrum, right? People are going to be spending and like market makers and stuff like that. So it's all officially doing it. It's just they could have been more transparent to begin with. And so, like, it's like a smirch on them a bit, but it is also quite funny to watch people suddenly claim ownership of a chain they just got ownership of for free two days ago, right? Like, it's always quite hilarious. It's like, yeah, we know better. Don't spend any money. Why? Because it'll make my token go up more in value. If you dump tokens, it'll make it go down. But we need that to make our project better. No, I want the free money.
Oh, yeah, for sure. I'm just thinking they could have done it clean. They could have skipped this whole thing and had it as part of, like, look at Sui and Aptos. Maybe I shouldn't lump them together. Aptos more. it had all this. ICP was very clear. 50% of the tokens go to us to do what we want. If they
and those tokens collapsed, they're
yes.
terrible.
But this
so
was
actually
the first PR misstep from them.
Yeah, that's true. From them for sure. But yeah. I mean, again though, like crypto PR missteps, like what Kobe yesterday, like put out an unsalted hash that Binance was getting a red notice, and it caused the collapse of Bitcoin by like $1,000 and took all these people out.
He's so clear that he's making predictions.
Yeah,
I don't know.
So
that was when I blame crypto, not Kobe.
Yeah, well, yeah, me too. But yeah.
So
craziness.
Now coming up on the tail end of this, optimism went away with barely a whimper. Arbitrum.
No. Our optimism is a strong coin for sure. A good coin.
Chain will be fine, but ZK Sync
base is built on optimism chain. A variation of it. Coinbase.
Okay. But now we have ZK Sync. So we were our third option coming out. It's been out for a while. Their token comes out soon. So more so I'm saying with the whimper is Optimism token kind of fluffed for a day and went down as everyone stopped talking about it. Arbitrum, people are excited. The ZK Sync token, if you want to farm it, go use the ecosystem, transfer coins. Well, not really transfer. You still use your ETH interface in MetaMask, but that's the train to start using. And then we will complain about our ZK Sync free money in about 6 to 8 months about why it wasn't enough. David got more Arbitrum than I did, but I thought I did more on-chain activities.
Longevity is the key. And I own more NIFTs.
You do own more NIFTs over there. Will ZK actually learn from the past and manage the landmines of everybody wants free money and they want the money's value to go up, and they got to pay themselves for all the work they've done over at ZK Sync and ZK Era. So how are they going to mess this one up next?
All right. It seems like we're pretty weedy now. Maybe we should go a little more macro and jump to the 4-year cycle and David's best friend, Bob Loukas. Did I say that?
Bob Loukas.
So what's Bob got to say now? Like, I've watched some of the YouTube videos that you've sent over the years, Bob. Years meaning like 2 years, and he seems to be fairly accurate.
Yeah, he's right on the money.
Is he going to be accurate?
Taking laps. Yeah, I would argue he's well. I mean,
past performance is not a predictor of future, but go ahead.
It sounds like something that people who lose in future performance say.
It's what's on every investment fund.
Exactly. Investment funds. How are those things doing these days?
Investment funds, which are NFA, right? Buy this fund, like not financial advice, man.
Yeah. But yeah, exactly. So yeah, no, he essentially, Bob is like, he follows his own method. It's 4-year cycle method. And essentially what the 4-year cycle method is you look at any chart, especially new things coming out, but any other chart, and you look at cycles developed through that chart. And it tends to be that you can start to see cycles develop because what cycles represent is sentiment in the people who buy and sell the asset that you're talking about. And for the longest time, it took me forever to try and figure out why this was. I was like, wait a minute. So it's a 4-year cycle. You buy at the beginning, you sell at the, 3rd year, and you buy again at the 4th, and, you just kind of follow the 4-year cycle. But essentially like what it is people are not logical, right? Like they go into the casino thinking I'm going to follow the 4-year cycle, and then they go and play slots because they got bored halfway through or a quarter or whatever it is. And so like any asset class's cycle is almost an imprint or a fingerprint of the people who are in it, whether they be passive investors. And so you see like 12-year bull cycles that we just finished, like, where everyone printed free money and put them into stocks. Or you see some would say that there's a huge cycle that's changing now from the 70s where gold shifted off of the gold standard, and then you saw inflationary money, and now you're seeing T-bill backing money. But either way, like cycles follow through. Bitcoin cycle is so you look at like all the things that lead to a cycle. And so what is Bitcoin? Bitcoin to me is not a risk asset per se, because a risk asset is like you're betting on it as to me, it's more like a luxury good, like at different times of the cycle. In the later ends of the cycle, where everyone's talking about it, and you're like uncool if you don't own Bitcoin because it might go up. That's when it becomes a risk asset. Over here, though, it's more kind of like a religion / gold,
which is the reason you two are so heavily invested in it still.
Mm-hmm. Yeah, I believe in it. I actually believe the white paper. I believe the message, and so it's easy to be in Bitcoin when you're a true believer, because even if it goes down, you're like, it's going to go back up eventually because there's enough true believers.
I guess it's easier to think how far down it goes. Yeah.
Sure, exactly.
Yeah.
And so really what you're looking at is like when is price supported by true belief, and when is it supported by FOMO and craziness, and basically just try and sell when this happens and buy when you see the true belief happening again.
Right.
That's very hard to do, and so the way you do it for Bob is you follow for the cycles. You identify a cycle in an asset once it happens, so you can't do it for the first 2 years, the 2 cycles, and then the third one you can start to see. You're like, okay, here we go, and then it will change after people notice it, down the line, and you can't trade it anymore. But if you can notice people's psychology as imprinted on the market, on the chart, you can run in ahead and you can get out early. And more specifically, I think is important to understand is you just generally have a plan. And so instead of running around the casino just being like, oh, that didn't work, well, maybe I'll just go try roulette, and then you just lose everything, you at least have a plan to stick to that will protect you from being yourself. I think that's the largest thing about it.
So in the casino, you'll lose money consistently rather than all at once.
Yeah. The casino, though, like at the back room, you've got poker tables. No, it's true though. You got the poker tables at the back though, and that's
there's actually skill for that. Yeah.
But everywhere else, you're absolutely right. If you leave I'm going for the poker tables, but might just play a little. Nope.
Yeah. And playing poker, I have friends who play well, and we play for fun, and these are $5 games. The ones who fold every time because they only play their good hands. And it's so boring. And if you get stuck with those two people towards the end, it's so boring. And usually they win. Occasionally I'll win. And that's like, I like to go big and have fun. And, it's small money games. But it's like David said, playing alt seasons, playing NFT hypes, playing different things versus I'm going to wait until Bitcoin seems to be boring. And when it's exciting, I'm going to leave.
So where are we at now then? I think what sounds like
excitement.
That's what I thought.
And our friend Mitch is talking about people look at the price now and we're in the microcosm of, is it going to 30? Is it going to go back down to 24? And he's maybe a step back from the weeds that we are. And his reaction was it's basically doubled. I picked up some $16,000 Bitcoin, and I know it was lower than that. And I know we're not exactly at 32, but he's right. It's basically doubled. And technically we're up 75% this year or since the summer, really. But we're picking up, and he's excited, and he's part of the ecosystem. So when's the next person going to notice that it's doubled, right? Before the hype starts. So by the time the hype is there, we're at 60K. And if you were here all along, you're already up 3x.
Yeah, but you were still scared all the way up to 60 because you're like, I still don't believe in this. The crash was so intense. It just is over, right? And then you get to 60, you're like, wait a minute, maybe it's actually going higher. And so those are kind of the mentality that plays through the market. But I think the thing is that, yeah, it's weird. Like everybody, it's almost like two things. One, nobody wants to look out beyond a year because that's a long time. And two, even if you have the ability to look out beyond a year, it seems to be that people are willing to bet on the less sure thing in the short term because they don't want to play a year-long or longer game. Like I tell people about longer cycles, and they're just like, what? No. Alt season is now, right? Or next month? I want the alt season. And you're like, that's the way the casino works. But if you want to make money in the casino, you have to actually play. Yeah, you play the entrance. You just sit there by the door and you say, wow, there's a lot of people coming in the casino right now. Probably time to buy some, whatever. Or, oh, everybody's leaving. It's getting stale. Get out. And so, yeah, it's the people, both they don't want to play a longer game because it's long. And two, they are then willing to bet on themselves against all odds, which they know against all odds. You'll ask them, why don't you just buy Bitcoin and hold? Bitcoin might go up 10x. Well, I want the 100x. It's like, That's just a myth. Not a myth. It happens, but even if it does go up 100x,
well, that's back to the casino logic. You can get 100x on your coin in a slot machine.
2 years of holding.
Yeah,
I bought exactly all through a bear market and held and held and held, no matter what people told me, waited for the bull market. And a lot of that stuff stayed flat. I'm still holding my Stellar from 2018, but I also cashed out my vet. So, but none of that happened in 2019. I don't think until 2021 I sold any of those.
Yeah, and that's really rare because most of the time you'll sit there unhappy for like a whole year, and then it'll go up like 40% or 100%, and you're like, "Oh my God, this is great! Finally, sell!" And then it goes up the rest, right? So it's all a human mentality, right? Like the other thing is humans don't think in linear. Don't think in log. They only think in linear. We think year and then year and then year and then year. But if you think like, what's the world going to be like in 10 years or 20 years or 50 years? People just can't think that way. Like it's just. So you can't really plan out 4 years in advance or 10 years in advance because it doesn't make sense. Like that's why compounding
everything's so
hard to understand.
Within 10 years, yeah, well, it could be a pandemic or something, for example.
Yeah, sure. But even with compounding interest, right? If you're putting your money in the bank each year, in theory, 10 years from now, the dollars you are spending now are worth $10. So would you be willing to spend that $10 now on that pizza or whatever? No,
I would often think of that. I would think, I could spend $10 on this pizza, or it'll be worth $40 in 5 years. And when I retire, I'm like, I'll just hold. So we'll see. All right, we only got a couple minutes left to go. We had a prediction, but this is a side I definitely been seeing more when I go to look for articles. It's definitely like crypto's up percentage. So you can see the hype is here versus the crypto winner. A couple minutes left to go. Again, I thought we were supposed to be at 32. I think was the prediction. We're at 28 right now.
Yeah, I was hoping by the time we got on the pod, it would be there. Bitcoin is interesting. It is not performing against ETH, which is pretty interesting and exciting. But Shanghai is coming up. The
bullish unlock. Bullish unlocks are back.
Yeah. Well, Shanghai update to the Ethereum chain will allow anyone to unstake and do a bunch of other stuff. And that's the last big update for a while. So I would imagine once it goes through and everything is fine, then I should see some Ethereum moving up. So
so it's essentially flat from last week, right?
Yeah, but 32 next week.
Okay. I guess if you say it enough.
Yeah, exactly. Yeah. Manifesting destiny.
Yeah. There you go.
I don't know. I bought T-bills this week to play it safe, so I don't know if I'm allowed to guess.
And why did you buy T-bills?
Diversify.
Okay. And what do you get paid on T-bills?
488, 475.
And how long do you have to lock it down?
3 to 5 months. I only bought short term because the world's volatile. But mostly to diversify and have cash on hand in the next couple months without having to touch Bitcoin or ETH.
Gotcha.
In the near future, there'll be people holding $10 10-year like T-bills with like 3 or 4% interest or something. They're just laughing as the interest rate collapses below 2% or 1%.
Yep, I'm eyeing those. That's why I bought the short-term ones now.
Yeah, gold.
But 10 years. Will the dollar be here in 10 years?
I think
that would be our last moment.
No, the British pound is still around. It's just funnier than it used to be.
There you go. All right, we have not much time left to go, so we'll see you guys again next week.
Have a good week, guys.
All right, we're already on. Big announcement coming soon. 5, 4, 3.